Good morning, everybody, and welcome. This is the pound Swiss franc. We are looking at the 800 EMA, and we are watching price coming out from fairly deep in these Keltner channels right back down to the 800 EMA. I wanted to just quickly take you through because this is so important. The pound Swiss franc has been on an incredible trend. Let's look at a longer time frame here. If you look at the hourly chart, you can see this huge move up here, just relentless buying. In fact, if we go to the daily chart, it gives you an even greater idea. We've been going up non-stop since very early in March. So very difficult trade in terms of trying to trade back to the mean. It's such a strong trend. There's two things we need to think about. When is the trend going to end? So if you're a momentum or a trend-based trader, where should you be buying and should you be buying? And if you're a reversion-based trader, reversion to mean-based trader, well, where do you get in to start selling? So the first thing that we want to look at here is this deep penetration into the Keltners here is definitely a warning sign to everybody. To be trying to buy this level here and trying to buy this level here is a recipe for disaster. This is right up in the deep in the Keltner channels, and it's just going to result in pain. But what's also giving us quite a lot of data around this is if we go and have a look at the stats. Let's go and take a look because that is going to definitely help us. And here we go. If we look at the actual numbers here, we can see this is the numbers that we're looking at. Very clear, we spent a lot of time away from this EMA. The calculations at the current rate of change, distance and time spent away are giving us very high comparative probability data that, when we look back over the last couple of 100,000 bars of data, price at this level has always come back to the EMA. Price at this distance and time away from the EMA has always come back to the EMA. It gives us a huge heads up in terms of saying, if that is the case, and the stats are telling us that is the case, then what we should be looking at doing is selling this rally with an anticipation of a move back to this mean as by the stats. And the key here is all about taking small position sizes, as you can see down here, and then selling further up as we get deeper and deeper into these levels here, is really just building that average position size up, knowing that with the stats, this is going to roll over like that. There's a couple of things here, guys. It's all about being anti-fragile. We do not want to be entering in a trade where you're saying, I have to be right in the next 20 points or my stop loss is going to get hit. I have to pick the turning point of this market. The market, it is very difficult to pick tops and bottoms in a market. What we want to be doing is building a position with probability on our side and allowing that probability to unwind. And you can actually see here that pressure that was built up on the non-stop buying just collapsed here. And we just saw the bulls who are at this point very complacent, because in the past, every time we've had a dip, the bulls could buy. Every time we've had a dip, the bulls could buy. Every time we've had a dip, the bulls could buy. The trouble is that once you start to get further and further into the statistics, where a reversion to mean is more and more likely, we move from a scenario of wanting to buy the dip to actually a scenario of wanting to sell these rallies, sell these rallies here, until we build a position where we know that price cannot stay away from its average forever. We know that that's the case, and the statistics are telling us that it's time for price to move back to the average. And so we can actually build a position here, 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 and here to give us a nice average line, and then price moves back. And this is lovely. It's coming at just over 1.2 lots into the mean. The trade will close down soon. But guys, I wanted to get this message out to you. Accumulate positions, use the statistics, and if you are a trend trader, this area here, in fact, this would have been a nice move up, but this entire area here is high risk. This entire area here is high risk because you spend too much time away from the mean and you've traveled too far in distance away from the mean, and these levels here are going to collapse. And if you were caught in this move here, or if you were caught in this move here, that was extremely painful. This really is typical of stop losses just getting smashed. And we can see now that this really is just rolling over again. It will come back and test the mean. Price cannot stay away from this mean. Guys, I hope this has been useful. I hope you've enjoyed it, and I will see you all at the next update.